Hey guys, welcome back. Now it's time to talk about tech stocks. Now, I know a lot of people watching this video like to invest in index funds, and typically this would probably be a US total stock market fund or a typical S&P 500 index fund. Well, what might surprise you is that a tech index like the Nasdaq has completely crushed the performance of the classic S&P 500. And I'm not just talking about recently either. I checked over a 1-year period, a 5-year period, a 10-year, 20, and even 30-year period. In fact, after crunching these numbers, I'm currently personally deciding whether to move my core index fund to a tech index fund instead. And that is the main reason I created this video. So, in this video, we're going to be looking at the Nasdaq versus the S&P 500, which is the better index. I'll then show you 3 great tech ETF options, and then we'll finish with a bonus tech ETF which in just 5 years has gone up over 1,000%. That's 1,000% in just 5 years. It's almost unbelievable, right? As always, if you do find anything useful in the video, be sure to drop a like. That would be very much appreciated. Okay, sit back and relax guys. Here is what you need to know about tech stocks and also some great tech ETF options. Enjoy. Okay, so first up, S&P 500 versus the Nasdaq, which is best? So I recently crunched the data and I looked at the year-to-date performance, a 1-year time period, 5, 10, 20, and 30. And we looked at the ETFs VU and QQQ. So you can't actually invest in the S&P 500. You'd have to do it through an ETF. So VU is representing the S&P 500 and QQQ representing the Nasdaq. Now, I did have data for all these, but I've starred the 20 and 30 year as VU didn't have this history, so I did just look at the Nasdaq and S&P 500. Now, check out these results. So first up, we'll look at year to date. So to be fair, looking at year to date so far, so just a few months, but the S&P 500 is outperforming the Nasdaq. So just recently, tech stocks have not been doing great. However, when we move on to a 1-year period, we can now see QQQ is outperforming VU. We move to a 5-year period, and now QQQ is doing twice as good as VU. Over a 10-year period, we can see the Nasdaq has still doubled the performance of the S&P 500. Now, when we move to a 20-year period, it's now almost triple better. And similar to a 30-year, it's almost triple the performance. So this data for me was really eye-opening, and it really makes me think, should my core index fund be the Nasdaq and not the S&P 500? So one thing we do need to account for is dividends. So you will get a higher dividend payout through the S&P 500 than you will versus the Nasdaq. But even when you add these on, dividends reinvested, the Nasdaq still vastly outperforms over the long term. So just wanted to show you guys this as it was very eye-opening. Okay, moving on, 3 great tech ETF options. Number 1, we have the one that we've just been looking at, the Invesco QQQ Trust. Ticker symbol QQQ. Now you'd think these tech ETFs were all very similar, but in fact they're not. They've all got a different mix that's in the top 10, and they've also got a very different amount of companies that they're tracking. So this one we can see that the top 10 companies make up 50% of this ETF. And I know this tracks about 100 companies. And we can see number 1, just over 11%, we have Apple, Microsoft, Amazon, Google, Tesla, so such a strong list of companies. And predominantly this is the United States, but we do have 1% in China and about 1% in Hong Kong. This is a 5-year chart, and you can see that tech stocks have just been crushing it. A little bit more about this ETF. So this is one of the biggest ETFs in the world. It has assets under management of 144 billion. This ETF contains 103 companies. The fee is nice and low at 0.2. Dividend for tech stocks is generally lower, so it's 0.56. And then you can see the 5-year and 10-year performance of these funds are just awesome. Moving on to number 2, we have the Vanguard Information Technology ETF, ticker symbol VGT. And you'll see that this top 10 is different. So this time, the top 10 makes up 57% of the total ETF. And in fact, over 1/3 of this ETF is just 2 companies. So big weightings into Apple and Microsoft. And you'll notice no sign of Amazon, no sign of Tesla. So it is a different top 10. And this one purely is United States, 100%. A bit more about the ETF. So this one, not as big, but it's still pretty big, 41 billion of assets under management. Unlike 100 companies, this tracks 340 companies. The fee is Vanguard low at 0.1%. Dividend, very similar, 0.59. And the 5 and 10 year is even a bit better. Now, don't worry, you don't have to memorize this. I'll put a side-by-side comparison together in a second, but this is also a very good option. And number 3, I'm going to throw in a bit of a wild card for the last one, and this is the O-Shares Global Internet Giants, ticker symbol OGIG. And O-Shares has actually been created by Shark Tank's Kevin O'Leary. So this is one of his ETFs. And let's take a look at the top 10. So this time it's only 37% that make up the top 10. So this is a lot more equally weighted. And you'll notice as well, the biggest difference about this one is that it's global. So we have United States, but we also have a big chunk in Hong Kong, big chunk in China, Germany, Netherlands. So you'll see this top 10, we do have Amazon and Google, but we also have Tencent, Alibaba, Meituan, so a lot of the big Chinese tech companies too. So this is much more globally diversified. Now, it's only been going just under 3 years, but it's had really, really good performance. We have 738 million of assets under management. This only tracks 71 companies. The fee is higher at 0.48%. It doesn't pay a dividend, which I actually found quite surprising. And its 3-year performance, very strong, and we don't have data for the 5 and 10 year. And this is why I included it as a bit of a wild card. Now, let's put them all together side by side so you can see them for comparison. We had QQQ, VGT, and OGIG. Now, assets under management, QQQ was by far the biggest, 144 versus 41 and small. But for the smaller retail investor, this shouldn't make too much of a difference. This tracked 100 companies, Vanguard added a lot more at 340, and Kevin O'Leary's only 71. Again, you've still got a lot of companies in all of them, so it shouldn't make too much of a difference. Now the fees, 0.2 is really good, 0.1 even better, 0.48 is higher, so it would need to justify that. Dividends, these two are very similar, 0.56 versus 0.59. This doesn't pay a dividend. Now where it does make up is the 3-year. So the 3-year performance, it is actually outperforming the other two. And VGT is outperforming QQQ over the 3-year and the 10-year. So I would say VGT is an excellent option. OGIG could outperform in the future, but it's a bit more of a wild card. And QQQ is an excellent solid choice. Now, for people in the UK and Europe, so you're not going to be able to get VGT or OGIG. The one that you have to look for is EQQQ. So for UK and Europe, do a search for EQQQ, which replicates this fund but in pounds. And to finish, the bonus tech ETF, which has gone up almost 1,000% in just 5 years. Which one was it? We have the ProShares Ultra Pro QQQ, ticker symbol TQQQ. So this has 10 billion of assets under management. Companies is 103, the fee is higher, 0.95, no dividend, but look at the 5-year and 10-year performances. 1,000% for the 5-year and 10-year 5,748%. So what exactly is TQQQ? Well, it's basically QQQ, however, it's a leveraged ETF. So whatever QQQ does, this will be doing 3 times the leverage. So this is excellent in a bull market, but I caution and warn all investors. This means that when it goes down, it will be dropping 3 times faster as well. So invest with care. In fact, with tech stocks close to setting all-time highs in this region, you probably want to stay away from QQQ. The best time to use something like this is when the stock market drops and crashes. So let's say you invested just a year ago in this drop. The S&P 500 retraced 30% and this one did 400%. So you can massively reduce your risk by investing after the market's gone down 30, 50, 70%. So just wanted to put this on your radar, but this is a very powerful ETF. So there you are, guys. That was the surprising data that came out when crunching the Nasdaq versus the S&P 500, and also 3 great technology ETF options. The fact that the Nasdaq has beaten the S&P 500 over a 1-year, 3-year, 5, 10, 20 and 30-year period, it says to me that it has proven itself over the test of time, and I will be looking to whether I want to make this my core index fund. The only thing stopping me is that I remember Jack Bogle of Vanguard saying, "Buying funds based purely on their past performance is one of the stupidest things an investor can do." And he also talks about reversion to the mean, but a 30-year time period is a long time. And when I think about the future, about the next 10 years, I'm even more bullish on technology. That is where most of the innovation is. Think about it, the new car companies coming out are going on the Nasdaq, like Tesla, or the next industries like blockchain or AI, artificial intelligence. These are going to be tech companies as well. Ultimately, this would mean that you're going further down the risk curve. And here we have one of my favorite charts, the risk curve. So on the left-hand side, this is how much reward or percentage gain that you could be getting. And across the bottom is how much risk you're prepared to take. And this will all sit on the risk curve. So for someone who just wants to stay in absolute cash, you wouldn't really be making much of a reward, but you're also taking a tiny amount of risk. Now, for the traditional S&P 500 index fund, you'd be up here. You'd be getting some really good reward and only taking a little bit of risk. If you were to choose QQQ and the Nasdaq, you'd be heading down the risk curve. So potentially you could be making more reward, but you're going to be taking more risk. With tech stocks, we could see a reversion to the mean. If you are following this channel, I will keep everyone updated with what I'm doing personally, so stay tuned for that. Aside from that, I personally just found this very interesting, so I hope you found this useful too. In fact, just one favor to ask, if you did find anything useful in the video, don't be shy, be sure to drop a like. That would be very much appreciated. And tell me, what do you think? I'd actually like to open this to discussion. The Nasdaq versus the S&P 500. What do you think? And if you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.